Okay, record. Okay, we will present about the stockholder equity process. So we are from group 6, which is I'm myself, Muhammad Nahor, Hilfi, Lokman, and Umar. So Umar cannot join because he have a problem in internet connection. So we proceed to stockholder equity process. So the process involved in the cycle is stockholder equity process is a process that related with the company stock total shares and equity, where the equity is the part of the company capital. Stockholder equity including common stock, preferred stock, paid in capital, and retained earnings. The major type of transaction occurs in stockholders equity are issuance of stock, repurchase of stock, and payment of dividend. So the source document involved is uh, the document of issuing of shares, the document of dividends payment, the resolution of register of shares of the company. So the journal entries and account involved is uh, shares, debit investment asset, credit shareholders capital, payment of dividend, debit dividend expenses, credit cash or bank. So the internal control involved is responsibility in preparing documentation regarding of shares and company equity, responsibility of preparing the dividends payment document for as an evidence of the dividends payment has been made. Dividend is the distribution of the dividend is the distribution of the distribution of the profit to the shareholders. So next we'll continue by Hilfi.
This area in the cycle, first is control risk, the segregation of duties among the internal control. Most important things where it can avoid from the management make mistake. Misstatement of distribution not based on the share investment. Many internal control haven't prepared the dividend payment document, and this can result that there is no evidence for dividend payment. Second risk is inherent risk. The bad company performance will let the company earn loss and will result that the shareholder not receive dividend. The more liability and debt of the company will worry that company will bankrupt and will give an effect that the shareholder lost their shares. Next is identify important assertion for the cycle. First is occurrence. The recording of issuing stockholder equity has really occurred before recorded. Second, completeness. The transaction incurred regarding of stockholders, such as issuing of shares and payment of dividend, must be recorded. Third, valuation. The amount of stockholders recorded in accordance with the applicable financial reporting framework. Fourth, accuracy. The management records the amount of stock appropriately. Next, the relevant audit procedure for the cycle. Uh, First, inspect the document such as resolution of issuing shares, the agreement document of shares, and document related with dividend payment. Second, inquiry the management regarding of stockholders and issuing of stock is incurred. Third, the important procedure to the cycle is recapitulation. The auditor provides working paper on stockholders and dividend. Second cycle is long-term liabilities process. The process involved in long-term liabilities is the liabilities such as loan, bond, and other long-term obligations. This auditing process of long-term liability is to determine the long-term debt that owned by company and identify the level of long-term debt management of company. Some document involved in the cycle, note payable, interest rate payable, bond agreement, and mortgage. General entries and account that involved in the cycle for loan, debit cash or bank, and credit long-term debt. For interest payable, debit interest expense, and credit cash or bank. Uh, Internal control involved in the cycle. Credit department has responsibility to record the long-term liability that incurred in the company. The credit department must prepare the relevant documents such as loan agreement, bond agreement, and interest payment document for audit purpose. The credit department must segregate their duties in recording the liabilities and preparing the document. The risk area in the cycle. First is control risk. The internal control not preparing the important document where it necessary for audit purpose. The management that not compliance with accession also will increase the control risk. Second, inherent risk. The higher liability will let the company has higher obligation and the possibility that the client is going concern in future is low. Next, important accession for the cycle. First is authorization. The internal control must have proper authorization in authorizing the new loan. They must have the right person to authorize in accepting their new loan. Second, completeness. The transaction of new loan bond or bonds that need to record must be recorded. Third, valuation. The value of long-term liability or bond must correct. Third, effort for classification, the recorded of long-term liability or bond must be recorded in proper account. Uh, Fifth, presentation and disclosure. Long-term liability or bond must be present and disclosed according of financial reporting framework and IFRS standard. Next, relevant audit procedure for the cycle. First, inspect the document. Inspect the client agreement regarding of long-term liability of bonds. Second, inquiry the client about the purpose of obtain loan. Identify that who are responsibility to authorize the loan. Obtain the interest payment document for the interest expense that made by client. Third is external confirmation. Long-term liability or bond must be correct, confirmed by the supplier. Next, if not badly.
Okay. Now is case 2 question, equity and long-term liability. The detail of the audit program is the detail of audit plan that prepared by auditor before performing their audit work. Audit account involved capital stock, retained earning, total shareholders equity. Audit program that have been planned, prepare the working paper on shareholders equity, collect evidence such as resolution of share register, and identify the share issued by the client. Next, prepare working paper on dividend payment. Next, prepare working paper on stock valuation as well as preparing working paper on retained earning and profit of the Zlo Corporation. B. For the purpose of the audit of the financial statement of Browall Company, what procedure should Maslow Kaya employ in examining the described loan? Determine the important debt position, which are the management must be completeness, classification, and obligation in the recording of debt. Next, determine either the client has made the interest payment and prepare the accounting for interest payment. Next, prepare the substantive procedure to the debt by confirm all significant debt with lenders and determine that all debt is classified appropriately. Next, inspect the bank statement whether the client make the payment every month and send external confirmation to bank to determine the account balance of loan secured and ensure that the dividend payment made with bank knowledge. Next, prepare the debt walkthrough by inspect the loan document and observe the segregation of duties for person who approving new loan and check the recording debt in the general ledger. Financial statement disclosed to you believe would be appropriate for the loan for the president. And says the financial statement disclosure will be qualitative disclosure. Qualitative measure means not showing an actual number, but rather providing information in other ways, such as using relative terms. The relative parties are more concerned about the important information that disclosed in financial statement, such as disclosing an entity's objective or strategies used to meet those objectives. Okay, that's all from us, Group 6. Thank you.